Hi traders, this is Blake Morrow. You're listening to the Morning Edge webinar. Who's ready to get down and dirty? You guys like getting down and dirty, don't you? I know you do. All right, we're going to get down and dirty and get our analysis going. Let me grab your questions really quick just to have them out here. And Nigel says, bring it on. All right. Carrie said, Blake, who is that extremely angry man you had on at the top of the hour asking for a friend? Thanks. I'm telling you, Paulie's an angry guy. You know, he doesn't admit it, but he's an angry Italian guy. It's all right. I like him. I like people with spunk. People with spunk, it's good. It's good. It's better than somebody just ho-humming it around life, you know? I like people that have a little bit of oomph in them. And Paulie definitely does, no doubt about it. All right, let's get into the analysis. First of all, I tweeted out a chart of the Aussie New Zealand. It was about 10 pips higher. We reached our inverted head and shoulder pattern. Also, inverted head and shoulder pattern target. We had a bull flag that we drew yesterday. That target was reached basically, and so I did pull some of my trade off the table, and I'm going to hopefully buy a little bit cheaper. The thing is, I hope it just doesn't get too much cheaper because I still have like 3/4 of my position. I do want to buy it a little bit on a pullback here, you know. So if we can get, you know, maybe 104.50 or so, I'm down. I'm down with that. You never want a trade like this, especially with the green bar that looks like this. You never want it to turn red. So if it goes down to 104.50, you got to be a little careful with it because you don't want it to hold down there. You know, if you make a quick dip and it comes back to being positive, that's good. You know, if it closes around 105, that's also a very bullish sign that we've probably got more to go. It is getting very overbought on an intraday basis. And so we're going to work off some of those overbought signals. You can see the RSI on the hourly needs to come down. 4-hour chart, same thing. We're really overbought here on the 4-hour. I think we just touched overboughtness. Yep, right there. So we're going to have to ease off a little bit, I think. And easing off on relative strength can be just as easy as consolidating, and then relative strength will ease off as you consolidate. But that does need to happen, in my opinion. Be careful with equities this morning. Equities are looking a little weaker. Matt just pointed out that the NASDAQ futures were hitting lows. Now, that's important because in the NASDAQ futures, we've been trading at all-time highs. If you missed it, we've broken into all-time highs the last couple of days. Now, we did hit a fib confluence here. You can see 127% extension. That was hit. And I believe, if I'm not mistaken, that's not this 127% extension. There was another, there's another fib extension that we hit. I have to go back and I might have to redraw some things, but anyway, we're trading up into some, in my opinion, some pretty key resistance up here. Really divergent relative strength. So you got to be careful with the markets. You know, the markets could get a little. It's Friday. It's been a good week. I think traders are going to say, hey, I got a pretty good bang for my buck. In regards to the equity market rally. Considering what had happened this week, you might see some profit taking coming into Friday. All right, let's get into, we do have Canadian data today. We have market PMI, but that's really almost an irrelevant piece of data. So really the data that's coming out today is going to be Canadian related. So we'll have to watch that very carefully, especially with the volatility that we're seeing in crude. All right, so here's the euro dollar. This is us yesterday. We drew this, and hey, I don't know if you remember yesterday morning's conversation. Yesterday's morning conversation, what we saw here and this is kind of pisses me off because I didn't act on it. But I don't know if you remember this, the analysis. Hey, if we can trade above 112.50, I'm looking to sell a new high in the euro dollar. I was hoping it'd get up to 112.65. Okay, I was hoping to get up to 112.65, but my focus was really on the Kiwi yesterday because I was shorting the Kiwi, and I'm shorted. I was shorted pretty aggressively in a few different ways. So I missed this, but we actually traded to new highs and then reversed. And at the Lunch Money webinar, we were down here, and I'm like, I can't believe I completely just ignored the euro on that reversal. Now we have come down to the 112 area, okay, and let's get rid of this stuff. We don't need it now. Okay, so we've come down to the 112 area. We've bounced, and now the question is, what do we do here? And if you look at this chart, just this wedge that we're developing, we're kind of in the middle of it. I really don't see any at this point where we're at any specific reason to buy or sell the euro dollar in particular. Now, I think if we can get back up here, probably it'd be worth a short. So if we can get back to 112.55, that'd be great. I don't know if we're going to make it up there though today. I almost doubt it. I have a feeling that we're going to be trading right around 112 most of the day. But that's me, Support right now. I mean, you have to mark the overnight low, right? And that's probably it. Low, high. 50%. I mean, if we take out the lows, there's a 50% right below it. So that means, any type of follow through is going to be fairly limited in the euro. So for today, I don't. Today or this week's price action is probably stunned a lot of people. As I said yesterday, I think the problem that you had with the euro dollar is that you have so many people that were buying. Buying the euro dollar, selling dollars, following the FOMC, they just didn't get paid for it. Paulie likes to say that quite a bit, but it's so true. If you bought the euro dollar and you just didn't, just didn't make what you had expected right there, then it's like, all right, well, I have to get out. And I think that's what happened with the euro dollar. It's just, you would think, based on what the Fed said and based on their actions, it's hard to even think like, is the Fed even going to raise rates this year? I mean, most people are pricing in December, but realistically, they're really pussyfooting around. I mean, but in the same token, you would think that the euro dollar would be trading up at 114, 115 by now, and it's not. See, price doesn't lie. So you can think anything you want, and you can have your ideas. I tell you, I got plenty of ideas. I'm full of ideas. I'm full of, predictions in my own head. And I can tell you, I'm wrong a lot. A lot. So just because you think, oh, well, the Fed, they're never going to raise rates, and oh, the Fed's, how can you put that much liquidity in the market, and the dollar should be, toilet paper, whatever you think, price doesn't lie. And so when it's, you look at the euro and you're like, man, it should be trading at 115. I mean, that's what everybody else would be thinking, right? And it's not, and it's not even rallying. You got a problem. Is it a problem in your thinking? Maybe. It's definitely a problem in your timing, right? So you just have to respect what price is telling you. Right now, price is telling you that the dollar's stubbornly strong. Now, I truly believe that if gold breaks 1380, the dollar will get crucified. I really, really, really believe that. but we're not there yet. We ain't. And if you keep trading, in that fashion, believing that, you're going to be frustrated, because it's obviously a very frustrating, you know, very, very frustrating, you know, for all the traders for the last, God, I mean, people have been dollar haters really for the last year predominantly, especially after the big run that we've seen. Remember when we were all shorting the euro at 140? Remember that day that we shorted it at 140? I mean, 139.86, I think, was where I shorted it, right after the right the day of the ECB. For those of you that weren't there, I mean, but since we've been here, people are just like, no, it's unsustainable. It's never gonna blah. I mean, yeah, I tried being in that trade for the last year and a half. Price doesn't lie, people. And for as much as death and destruction that should be poured upon the dollar right now, it's not. I'm not saying it can't happen. I'm just saying it's definitely a frustrating trade. All right. So I'm going to write down support of being 111.90 today. I don't think there's anything really to do with the euro at this point. Other than unless you want to take a stand, but also keep in mind we're in the middle of this wedge too. Let's go over to the cable. Now, you want to talk about a piece of crap? The pound is a piece of crap. It is literally a piece of crap. Now look at the pound. And we are on support. I mean, hey guys, if you want to take a shot at the pound right now, do it. But if you're wrong, get out. You know what I mean? I mean, look, we're on major, here, I'm going to take this. We are on major support. If we come out and we take out this 129.40, it's from the old airplane movie, when the poop really hits the fan. We break that and we might see 128. Remember last Friday? Unless you forgot what last Friday looked like. Last Friday, the pound got decimated. We were down 200 pips by the end of the week, end of Friday. Do you guys remember that? We're down 117 right now. What's to say that we can't be down 200 pips today? So that's why I say. That's why I say, if you're going to buy the pound, it's fine. Just be wrong cheap. If you get out, if you get stopped out, and don't look back. 29.40. It's obviously a really key support. Resistance is at 131.35. What resistance did we write down yesterday for the pound dollar? What did we write down yesterday? 120. What did we write down? 131.35. Is that what we wrote down? 131.35. Thanks, Larry. Or I mean, Greg. We went as high as 131.20 and rejected. That's a big rejection, right? Okay, it's bearish. Still is. Okay, let's go over to the Swissy. So the Swissy, here's the Swissy. All right, we held the 618 retracement once again. 618, 618. What that means to us is that right there is mucho importante. No, I don't speak Spanish at all. Agua. Agua. Si habla no español. That's right. And I live in Arizona, which, it's actually a good thing if you know Spanish around here. 96.50. Key support. Resistance. I think we could safely say this trend line. All right, support, support, resistance, spike low, spike low, spike Lee, spike low, spike low, 97.50. Andre said, I just got back from Arizona, Scottsdale. Really? I live in Scottsdale. Where in Scottsdale were you, Andre? You should have said hi. Doubletree? You're at the Doubletree? Which Doubletree? There's 1,000 of them. Just you were in North Scottsdale, weren't you? 97.50. Scottsdale, yeah, you're at North Scottsdale. I literally live less than a mile away from that hotel. You could with a jug of water because it's hot. You could have walked over to my house. We could have had a beer. I always tell people, hey, if you come into Scottsdale and if I'm available, I'll have a beer with you. I've had a beer with dozens of traders and lunch and dinner and. Oh, Andre said I went to Harley Scottsdale. Oh, you did? Oh, oh yeah, yeah. Okay. So I drive by that Harley Davidson dealership, that big, huge, gargantuan one, probably 4 days a week. So, and he said he went to Sedona. Oh God, beautiful, isn't it? One of our other traders, when he came to that Harley. This is when I officed out of the hedge funds office for a year. I couldn't do that. I did it. If you guys can't see my clock, it's 4:48 in the morning. I used to get up at 2 to be in the office by 3. When I worked out at this hedge fund office, I did it for a year. I couldn't get up at 2 o'clock in the morning. I tried it for a year, and it just possible. Well, one of the traders, one of our long-term, 10-year traders, he had come out for a Harley ride too, and he went to that Harley dealership, and he came over to my office. We had lunch, and it was cool, really cool. All right, dollar yen. Anyway, sorry guys. Stan says we don't take kindly of the North Scottsdalians around here. We are snobby folk. What can I say? All right, here's the dollar yen. The dollar yen rallied right to previous support, current resistance. What did we write down for resistance yesterday in the dollar yen? I think we wrote down 101.20, right? Well, if we did, that's a big deal. Okay, support is easy. It's still bearish. As much as I think we're making a turn, it's still bearish. Okay, as much as I think we're making a turn. I think the market's trying to turn here, but I'm not 100% convinced. I really want to be short yen. I just, I'd like to be short yen if the dollar yen goes this way, obviously. But we are definitely trying to build a base, attempting, okay? Melissa said 101.20 yesterday. Yep, well, the numbers have not changed, and look at how well we respected that yesterday. Yesterday during the morning edge we were here, we came up to the 101.20 last night in Asian trade and then reversed. So very, very respectful of that. I'm sure a lot of you guys look at this analysis that we do every day here, and you're like, man, Blake doesn't use any funky indicators or anything. No, this is probably the most purest, basic technical analysis you could be doing. Is what we do here every day. You don't have to get crazy, guys. It's the biggest, misnomer of trading the markets is, oh, you got to use all this fancy dancy crap. No, you don't. I've been using the same crap for the last 20 years, and it works superbly. I have an RSI. You notice I don't even have any moving averages on our charts, and I have them on some of my other charts, but it's, you know, it's not a necessity to put all that junk on your chart. It just confuses you, makes you less likely to make decisions, and you are useless in the market if you can't make a decision quickly, right? You can sit there and hem-haw and ponder about ideas all day long, but unless you can know what to do when to make a decision, that's why analysts analyze, and it's tough for analysts to be good traders too. It is, you know. Okay, where am I at? Dollar yen, Canadian. Let's go over to the Canadian. So the Canadian, we're faced with some Canadian data today. Obviously, the Canadian slipped pretty hard when faced with that news out of Saudi Arabia. It's the Canadian's very headline driven. We hit 130 yesterday. Resistance is going to be 131 and a quarter. I don't like these headlines that pop up on our Friday. They're very much just manipulation type of headlines that are just trying to manipulate the market higher, hence crude. So try not to fall too heavily for them. 130, 131 and a quarter. We're in a range. Let's take a look at the Kiwi. Now, I've had a lot of questions about the Kiwi. So I've been shorting pretty aggressively the New Zealand dollar the last few days through several different, all week actually, through several different measures. Aussie New Zealand long, Euro New Zealand long, New Zealand Canadian short, shorting the crap out of the New Zealand dollar the last couple of days. Every time we get up to this trend line, been shorting it, shorted all through, the last couple of days. It's been a really pleasant ride. We have a head and shoulder pattern here. I don't know where the neckline is. I'm not certain, I'm not certain if it's here. If it's here, I have no idea. All I know is we're developing it, and I would say if we broke below 72, that's it. Then we know for sure, for certain, that it's playing out. But you can see like these fan trend lines, they come into place so many different ways. It's hard to know exactly where the market's looking at. I will tell you though, if we break through 72 cents, it's gonna get hit pretty hard. Kiwi's had a rough go this week. If you look at the weekly candle, that's a pretty long wick, and you can see all these long wicks up here. This in itself is forming a top, in my opinion. Long wick, long wick, long wick, long wick, long wick, long wick. Then we got this wick here. That's all telling us that we're just about ready to roll over. Whether we end up rolling over next week or not, it's suggesting that, because bulls just can't get an upper hand. They just can't do it. Okay. So, in my opinion, we are on the cusp of really breaking down. It's just, what does it happen today? Does it happen next week? Does it happen, in a week and a half? I don't know. I know it's coming though. I know it's coming. I'm confident that it's coming. But that doesn't mean it's gonna come. Hell, gold could break out above 1380, and then all bets are off. Then you have to think that the Kiwi dollar is going to 80 cents at that excuse me, at that point. But based on what I see here, I'm pretty confident that we're turning lower. Again, things can change, but from what I see here, and the information that I have, looks bearish. The low here is 72.35 over 34, but I'm going to write down 72 and 72.35, and this one over here, actually, I'm going to put an asterisk next to it because it's really key support. All right, resistance, I think any move back up to 73 cents. Whoever's long, whoever's brazen enough to be long, will one out up there if we can get it. They'll be like, thank God we got to 73 cents. And as we've been saying, as long as we're below that red line up here, this one right here, it's bearish. Okay, it's just now starting to break. All right, guys, I'm going to go get some more coffee because I need it. I'll be back in a few moments. Don't go anywhere. Hi, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to continue our analysis, and we're going to go over to the Aussie. So the Aussie's held up very well, and I'll tell you guys, the Aussie dollar, in my opinion, here, let's get rid of some of this stuff here. I'm gonna get rid of some of this junk here. The Aussie dollar, in my opinion, is up against really, really key resistance. All right, and you can clearly see at this point, the triangle, the inverted double head and shoulder pattern, if you want to call it that. The multi-year trend line that we're up against. I mean, the risk reward right now is to short the Aussie. It is. But I'm going to also tell you that if we crack 77.50, the Aussie dollar is going so much higher. I can't even imagine being on the short side of the Aussie against anything. Okay? That's, I know you guys have heard me say that many times, but we obviously got to say it when we're up at resistance. Right? Things always look most bullish at resistance. They always look most bearish at support. And right now we're up at resistance, and it looks bullish, but things can turn, like they did there, That was a big green bar at one point. Remember, like we did there. Things look always bullish, most bullish when you're at resistance. So, be careful because the Aussie actually looks pretty strong against some of its, some of the cross rates. But if you are going to be on the short side, I mean, this 786 retracement is holding. So we can say 76.75 is resistance for today. 76.75, and then also 0.7750 just in case we should squeeze and start getting up there. That is resistance, and we are in a triangle, and so that means we're in a range, but we're in the apex too. So it's a dangerous place for bulls and bears in the Aussie. It really is. Right now, support is what we wrote down yesterday was 76 and 76 cents, and that's still a support. Okay, we went as low as 76.08 just this morning before bouncing. Okay, 76.04 is going to be support, or 76. Okay. Let's take a look at the dollar index. Let's see here. Where am I at? dollar index. Okay, so the dollar index, we held key support yesterday at 95. And the trend line that was coming in here, but we didn't quite get down there at 95. I'm just going to write down 95. I mean, but you see where resistance is today? To me, it's pretty clear where resistance is. It's right there. Okay, I know we wrote down 95.60 yesterday. Actually, I'm pretty sure. 96, 90, oh, wait, 95, sorry, it was 95. Damn it. 95, and then 95.60. That's it. And by the way, this is critical support for bulls. I know you all know that, but just making sure you know. Okay. Oops. We're in a range. All right. Let's go over to the peso. I do not own the Mexican peso. Okay. But to me, this US dollar Mexican peso, to me, looks like it wants to go parabolic. Now, I haven't seen a blow-off top move. I haven't seen a blow-off top move in the market in, trying to think of the last one. You guys know any of the last big blow-off top moves that you've seen? Because really the last blow-off top move that I can remember, blow-off top or capitulation type of move, the last one I can honestly remember is, no, I don't even think the dollar Canadian was a blow-off top. It was we posted a high, Nick. Well, I guess, yeah, maybe it was. Yeah, I guess you could say it. You know, maybe the Canadian. I know the Swiss was like a capitulation move. We were all over that. You know, Paul Franco recounts those days. Not this one here, but this one over here back in 2011. That was a capitulation move. The U.S. dollar Canadian, I don't know if that was really a blow off top though. I mean, it was just a. I mean, it was definitely a damn strong move, and this to me could the peso looks like it could do something very similar to this, you know, but you can see there's like a couple equal leg moves, and then we just kind of reversed, you know. But I look at the peso, and to me it looks like we can do the exact same thing, and you guys know, because I've been saying it for the last year and a half, I can't wait to buy the Mexican peso. I really can't. I can't wait to, you know, short the US dollar Mexican peso. But I sure as hell don't think it's right now. You know, and while we're hanging around above 19, we went to 50 yesterday, right? We went to 50. I can't remember if I wrote 1944 or 1950. I think I wrote them both, actually. 19.44 and 19.500. I think I wrote them both yesterday. We went down to 1950 and bounced. While we trade above here, there is no reason to be on the short side. And it looks like it has every intent of going higher, okay? So resistance right now is 1990. Well, this 1996 is the 127% extension. The recent high here was 1991. So I'm going to put 1996, just in case we start breaking higher today. And it's bullish, guys. It's bullish. If I get an opportunity to buy it down at 1950, I'm probably going to buy it today if it can get down there. Let's go over to the US dollar Norwegian krona. Here's the Norwegian krona. Okay. So yesterday, another possible false breakdown, but you can see these wicks are so long down here, you know. But I tried to actually buy this yesterday. I bought it right around here and I sold it, made a little bit of money. It was nothing exciting, but I bought it because it was a false breakdown, but I sold it for maybe 150 pips, which is nothing in the, it's like making 10 pips or 15 pips in the euro dollar. Was like really just a non-event trade. Um, 808 to 816.50, or 816, 8.08, 8.16, and I'm going to still put us in range, but we're threatening to go bearish. I mean, obviously, we need to really get a foothold below these lows. I mean, we need to really go. We need to really sell off there and get a weekly close below support. That's going to be pretty bearish. It's on the cusp, though. It really is. It's on the cusp. All right, let's go over to the Swedish krona, last but not least. Not a lot to do here. Same analysis as yesterday, really. I'm just going to move this over slightly. $8.45, $8.61. Same analysis as yesterday. All right, folks, your bias chart is complete. And I know, you don't have to tell me. Your life is now complete. It is, isn't it? I complete you. Or the bias chart completes you.